Epic. That's actually the name of the song. 3, 2, 1, we are live. Always have to start with that. How you doing, friends? This is Ernie from the Trader of Futures, and this is PatternCast. PatternCast is an AI, a pattern recognition machine learning machine that's redundant from the Department of Redundancy Department. It is a machine learning algorithm that scans stocks, Forex, futures, looking across more than 20 years of market data, searching for patterns that have relevance, that have expected moves, that are somehow matching up with the current market conditions and have repeated themselves at least dozens of times with a high degree of probability of an expected move within a 4-day window. That is everything. That is PatternCast. That is exactly what it does. It can search through terabytes and terabytes and terabytes of data in just minutes and find these patterns for us. It finds these patterns and it delivers these patterns to us. I do not know who this is, and I do not care. I must decline this. Must decline. Because we are doing PatternCast now. Why is the AI setups, why is it in front of me? There we go. So yesterday, at the end of the day, I said that it looked like the Mexican peso, the USD MXN Forex was a buy, and it was. And I'm in that position with a small position. As I do with all positions, I enter them very small. And today, we have another buy of the Mexican peso call if it reaches down to $18.94. Did it reach down there? No, it just missed. You can see it here in the lower corner right there. Yeah, right there. Got down to 18.98. So we're not adding to that position. Still there. It's a little underwater, not much, but the expected move is tremendous. So we're in the Mexican peso. There were two other trades today that triggered a breakout in oil and a breakout in the euro futures. The Boeing, it never reached down to this level, so that's out. The Mexican peso, as I said, we're not adding to that. But the crude oil, light sweet crude oil futures, and the euro futures both hit breakout signals today. And we can see those right here. In the upper left-hand corner is oil, and you can see the line there. It broke through, pulled back a little bit. And then the euro futures just barely touched. I wouldn't even know if I call this a breakout yet. I like to see a 30-minute bar close above it, and it has not done that yet. So some people in our service, they have different standards. The standard that I follow is a 30-minute bar that has closed above that breakout line, and it has not done that yet. So it's right on the precipice. Probably still a good trade, although this market setup will close in about an hour and a half. And that's the nature. That is the nature of PatternCast, that all of these symbols, all these signals and alerts or setups that you see here are good for one day. We put them out there the night before. PatternCast reveals them to us based on market conditions. We assemble them into this sheet, this chart here, and we send it out to our customers. And they may set up their machines, their trading platforms to, with limit orders or stop limits or whatever for that appropriate trade, and see because if they're sleeping overnight, they still want to be able to get in the trade. And so they'll set them up the night before. And then today we'll take a look at and manage any trades that triggered or wait for other trades that have going to come in. But at the end of the session, that's it. We wipe it out and then we go on to the next day trades. If they do trigger, then we start tracking them. We start tracking the progress and we manage that profit. Now, somebody asked me yesterday, well, Ernie, what do you do? I mean, aren't there any stops on this? And I've mentioned before that we have what I call and what I recommend. Now, we don't include stops with our calls, and there's very good reason for that. And that's because everybody has a different size account. Everybody has a different tolerance and capacity for risk. What we do recommend, well, we do have one kind of stop, and that is the 4-day window. It's a time stop. So if we get into a trade after 4 days, that's it, out of the trade, regardless of where that profit is. Well, there could be an exception to that. So, for instance, let's say that we're running and there's 300, 400, 500% profit. We might let that go and then step up our stop or something. That's about the only case. Otherwise, we get out of the trade after 4 days. And our stats have shown that about 80% of the trades, given that scenario, that time-based stop, will end up positive, profitable. 60% of them will have hit their targets, which is the exit that you see right here, the exit column, will have hit their target or exceeded it. And in the gray here, this gray area, right there, gray area, those are the ones that have triggered and have either hit their target and we're still in them or we're out of them. I mean, once they've hit their target, for all intents and purposes, you could be done with the trade or you can see it further. A lot of the clients will see them further. And as you can see from here, we're racking up the winners. Now, once the 4 days is over, they drop off this chart. Actually, this 3.7, that should be off the chart now. And 3.11. Okay, so there are a few that need to be off the chart here. Need to talk to the AI mentor about that. So there should only be 2 that are on the chart here right now. This oil and this euro dollars. And then tomorrow, you'll see the Mexican peso and crude oil on there again. You can see that oil triggers a lot. But that's recently. I mean, we've had, times where we've gone a week or more, 2 weeks without an oil trade, and we'll have all kinds of other trades. So, did gold? Let's see. Did any of these others hit? Let's just check them out. NQ. Oh, look at that. There is a drop. Look at that. Look at that drop in NQ. There is a buy signal at 72.53. Are we going to hit that live? That's a tough order. We're at 73.50. It would have to drop another 100 points for us to get into that. All right, so that's a good illustration for what the PatternCast does. It has scenarios. And these scenarios, they're tough. They're tough cookies because the market has to move quite a bit for these scenarios to fulfill themselves. And that's why we have I think that is one of the reasons why we have such a high percentage of win rate. because they really do have to make exceptional moves. However, we do, on average, get about 4 to 6 trades a week, and about 80% of them, that means about 3 out of those 4 or 4 out of those 6 are going to be winners, or 4 out of that 5 or 5 out of that 6, whatever that number comes out to, are going to be winners, and they will have, most of them will have reached their target or exceeded them. So that's, and given that scenario, going all the way back to October, we've only had 1 week where we've had a losing week, and it was a very minor losing week. Every other week has been a positive week with this system. Every single week. So when we put on our website, traderofutures.com, the statistics that I just talked about, 80% winners, 60% reach or exceed the target, average return on capital, more than 25% of the capital used. I mean, these are off the chart numbers. I don't have to say, oh, that's hypothetical. Now, these are the parameters that we actually program into it, and this is what it's hitting. We're being a little bit modest. It's actually been well over 80%, and it's over 60% reaching the targets. But those are the parameters that we set. And what I'm saying is it's not hypothetical. Those are conservative estimates of the actual results. The actual results are better. Now, I don't want to say that, I don't want to say exactly what it is. It is much better. It's easier to underreport and overperform, or underpromise and overperform. But even the numbers that I put out there, I can say without reservation, without being, say, called up by the SEC, that this is not hypothetical. That is real. 80% win rate, better than 80% win rate, better than 60% reach the target or better, and better than 25% return on capital. Not hypothetical, real. Absolutely real. And that's cool. That is so cool. So anyways, someone asked me about, well, then how do you set stops? Another reason why we don't have stops is that all of the strategies that PatternCast discovers, and that's what it's doing, it's finding unique strategies for every single setup. And because they're unique, they are uncorrelated with each other. And when you have multiple non-correlated strategies running, which is, by the way, the number one way to trade, not non-correlated assets, non-correlated strategies. You could have the same asset and trade that same asset with multiple non-correlated strategies, and that would still be an effective method. Now here we have uncorrelated assets and uncorrelated strategies. It's the strategies that's important, because what that does is that means that the returns are not correlated with each other. So if we had a market drop or something, they're all not going to go down at the same time because we're long and short. And so that's the reason why we've had such great success over the long term and haven't had a losing week, because they have a tendency, when you take all the trades, to hedge themselves. And that's why we don't talk about stops, because that natural hedging effect almost mitigates the reason for putting in individual stops, which is where most people fail on their trading. They put stops on individual things, saying, oh, I'm going to, there's 1 part risk, 2 parts return, which is usually bullshit. It's all made up. And so that's what they do, and they end up more often than not hitting that 1 part risk and losing money. Now what we suggest is that you look at your entire portfolio. And what we've found that over any average year, there may be a drawdown, maybe 1.5 times, that would exceed, say, 5%, which isn't a huge drawdown. And so what we suggest is that you look at your whole portfolio and figure out, well, what is the percentage, if you were only going to have one drawdown on average a year, what is that percentage that you're willing to lose in risk? And some people will say 5%, some say 10, some say 20, whatever. And that's what you do. If you hit that percentage, then you get out. You wait for a few sessions and then start up again. So that is what we actually recommend, is what we call a portfolio stop. Figure out what that amount of risk is that you would want for your maximum drawdown in the course of, on average, a year. Let's say it's going to happen twice a year. What would be the maximum drawdown? Now, if you could trade like that, I mean, those are stellar numbers. If you could trade 5 or 10% drawdown once, maybe 1.5 times a year, that would be fantastic. So that's how I would look at it. So there are your range of different types of stops that you can use in a system like this. You can have a portfolio stop, you have your time-based stop, and that's usually enough. And then you have assets or strategies that are both long and short, and they are mitigating risk because they are essentially creating a hedged portfolio by having multiple non-correlated strategies running simultaneously. That is PatternCast. That is everything there is to know, at least from your side of the table, about PatternCast. When I say from your side of the table, I'm saying, well, I'm not going to give up how we actually train this thing and how it goes through its own clustering algorithms and does its own self-learning. We don't even really understand that, quite frankly. But what we do know is that it evaluates millions and millions of patterns every evening. And right now we're just starting to bring out the equities. As you can see, we're averaging 1 or 2 equities a night put out there. But as we go on, we're going to expand and expand and expand, and a lot of that has to do with our automation. So it takes a little while. It is taking a little while in terms of automation. And in fact, our developer, we may be looking for another developer. Our developer's working hard on it, but I don't know if it's we need more people. So once we get that automation done, and if you've been following us, you'll see that we've been adding more and more and more and more setups. Tonight is a relatively small number of setups. 1, 2, 3, 4, 5, 6, 7 setups. Often you'll see 11 to 15 setups. As we go forward, I think you're going to start seeing as many as 20 or 30 setups. So there will be much more choice for people to make as we complete that automation cycle, and that automation gets better and better. PatternCast itself can go out there and do the work, but then there is the human interface of querying PatternCast and getting all these setups out of there. So there is still some manual intervention that needs to be done to communicate with the AI. That's right, we communicate with our AI. Does it have a conscience? That is the big question. Is our AI alive? I don't think so, but maybe someday it will be. Maybe someday. All right, well, look at that. The NASDAQ is turning around. So this is just, I don't think there's any chance that we're going to hit that entry target. Eurodollar is pretty slow. Crude oil is kind of lagging. Mexican peso. Looks like all these moves were made and then everything is just taking a break. So we'll come back tomorrow and we'll check it out. Where are we now? So we have a few people online. Let's see what people have to say. Oh, look at that. Do you use stops? So I just explained all about the stops. Do you trade micro lots with Forex? Of course. one of our rules, the Great Collapse, is that we recommend people trade as small as they possibly can, and there are a lot of options to do that with PatternCast. I mean, even though we do trade futures and Forex you can trade full-size positions where are 100,000 unit lots, or mini positions which are 10,000 unit lots. Like for instance, on this on the Mexican peso, I put on a 25,000 unit lot, which is somewhere between a full-size position and a mini position. And then there are micro positions, which are 1,000 unit lots. With futures, there are many futures that have micro positions, which are 1/10 the size of the regular futures contract. And so I recommend people, particularly with oil, I mean, if you have a smaller account, you can certainly trade crude oil futures by trading the micro futures contract on oil or natural gas or several of the currencies or gold. And also in May, the CME is going to be coming out with micro contracts for the index futures. That is exciting. So you'll be able to trade virtually all of our signals with micro contracts. So if you have a small account, you will be able to trade with PatternCast and take advantage of the same advantage that people with larger accounts have. That is really exciting. So Michael Mack asks, paper trade the CL set up with success. Okay, that's a good idea. Want to subscribe but only have 10K trading account. Well, there's your answer. There are several of these. With the Forex trades, you can trade the micro or the mini. And with the futures, you can trade the micro. Oil, there's a micro. Most of the currencies, there are micros. Gold, there is a micro as well. And that's what I would. And then very soon, the index futures like the ESE Mini, the S&P 500, the Dow future, the NASDAQ future that we're seeing up here right there, will all have micro contracts available. So they will be 1/10 the size. So you'll only need like $650 to trade the NASDAQ. That's crazy. Vonjara, would you comment on how to manage the triggered CL trade today? I don't know that there's much to tell. The rule that I follow, basically, is that if on a 30-minute bar it closes above the breakout line, then I take the position. Now, I just happened to get it right at the breakout line. It closed above it. It came back down, and that's where I had my. And I'm in right at the breakout line, and it's dropped down. Now, what do? I do nothing. I just wait. There's a 80% chance that it's going to close above that in the next 4 days. Now, if you want to, you can put a stop somewhere down here that you're comfortable with, based on your account size and your tolerance and capacity for risk. So whatever that is, you figure out where you want that stop. That's why we don't specify a stop, because to us, there is no data here for a stop. Now, one other thing that you could do is, I suppose you could look at the volume profile. So if I were looking at the volume profile of oil, we don't need this. So we can see very clearly why there's a breakout. All right, you can see right above here, there is nothing here. Big, huge volume well. And actually, it's right there. That's where it's lying, right there. It is ready to break out. So I would say, here's another well right underneath. Let's draw something that will illustrate that. There is a big volume well right there. You might think of putting your stop there, because if it enters, or put it somewhere below that line, maybe I would draw a line like right here on the edge of the volume well, right there. Maybe that would be a good place to stop, say right around there. What is the prices that I'm getting here? 64.65. Yeah, that doesn't seem right, does it? What's the price of oil right now? 59.09. That's not the right contract. What's the April contract say? Yeah. So for whatever reason, it was looking at a future contract. Maybe the May contract. Yeah, it looks to me, maybe you look at the continuous contract on I don't know if you would look at the continuous, but the May contract is a little bit much higher. So that's an interesting thing. The future contracts are much higher. The next month is, my God, it's almost $2 above this month. That's crazy. So I would say from a volume profile perspective, probably right around here, maybe 58.30, 58.40 would be a stop based on profile, or maybe even down here, 57.50. I mean, that depends on how much risk that you can take. If you're in a full-size contract, that could be a couple $1,000s. But if you have a $100,000 or a $200,000 account, that's well within your limit. If you have a $10,000 account, then you're probably not trading the full-size contract. You're probably trading. You're more likely trading the mini, and so then you're only talking about a couple $100 as risk. So that's why we say, you trade according to the position size that is commensurate with your account size. If you're trading the full-size contract with a $10,000 account, I don't know how to help you there. That's, it's a little crazy. It's risky, but, that might be the way you want to play it. And then to ask me how that you would manage that, I don't know how you manage that. Now, if you had a $10,000 account and said you were playing the mini contract, completely different story. Then I would say, probably in the, I have a stop in the 57.40 range. That's what I would say. That would make a lot more sense. Would you trade the MAGA ETF with it having very low volume? I don't know what the MAGA ETF is. What is the MAGA ETF? It's a GOP tracker ETF. Isn't that interesting? That's the Make America Great Again ETF. Is that what that is? That's crazy. Wow, look at that's a new one by me. The MAGA ETF. Let's look that one up. Thanks for bringing that one to my attention. So Umberlay wants to know, how large of an account can you trade PatternCast while maintaining proper spread to risk per trade? Really, any size account. It all depends on whether you trade full-size contracts or micro contracts. So we have people with, quite frankly, once we have the micro E-mini contracts for the indexes, you could trade with any size account down to $5,000 easily, very easily, because most of the futures products will have micro positions. All the Forex have micro positions, and stocks you can trade any number of shares that you want. So there would be no reason why you couldn't trade a very small account. With full-size contracts, now you need to have an account that should be more like, 10 times the size of a micro account. So maybe, 20,000, 30,000, 50,000 would be more in line. And then you could do anything in between by doing a combination of micro contracts and mini contracts. So a lot of choices. Michael Mack. Anyone know the symbol for the micro or mini oil contract? Can't find QM or MCL with my broker. Well, who is your broker, first of all? Let's see. Let's look up the MAGA ETF. It tracks an index of U.S. large-cap companies whose employees and political action committees are highly supportive of Republican candidates. That's crazy. That is so. That is really weird. That's awesome. So, Michael, who is your broker? And maybe I can tell you what the appropriate symbol is for it. But QM is an MCL. I mean, I have my own spreadsheet that shows what it is. So you should call your broker and ask them. That would be the easiest way to do it. On TD Ameritrade. Yeah, I think it's. Hold on, let me find out if I have that down. Bloomberg here talks about the strategy. There it is, futures cross-reference. Micro account. For crude, I have QM for Thinkorswim, which is TD Ameritrade. If you can't find it, then call them up and find out what the hell's going on. So let's read a little bit about the MAGA ETF. Building buzz about a new exchange-traded fund often just means buying newspaper ads. Hal Lambert has a different approach. He's hitting right-wing talk shows and roaming conservative conferences in a familiar-looking red cap. That's because his fund is different, too. Sure, it has an investment thesis, but it's also a badge for the political identity its stock ticker evokes, MAGA, as in Make America Great Again. The ETF not only markets to people loyal to the U.S. president, it also invests in companies that are loyal to his party. Not necessarily the most profitable companies or the fast-growing or the ones with the most attractive price-to-earning ratio or any of a number of other metrics a typical investor would use. Instead, it selects companies based on public information about donations to Republican candidates by employees and political action committees. That is so awesome. I don't know what to say. I got to tell my one of my business partners about that one. That's crazy. MAGA ETF. Hold on here. I got to copy this link and then send that off. Umberlay, do you think a $1 million account can be traded using PatternCast and still spread the risk over enough non-correlated trades? Oh, absolutely. Absolutely. Because there are, at any one time, I mean, we've had as many as, 7 different contracts in play. And, it depends on, how much risk that you want to take in that account. So that might be enough for you. Of course, with that size of an account, you could probably add other, additional strategies to that. But PatternCast, even if you wanted to take PatternCast as sort of a minority position within your within that account, that $1 million account, that it could be a kind of an equalizer or a buffer, a really reliable strategy that's making good money, and it keeps you off of tilt. That might be another way to look at it. Or you could just trade it straight out, that being your primary account. I mean, I've looked at this, that I could easily do this with a multi-million-dollar account, no problem. And as we move on and we automate more and more symbols and get more out there, there will be more choices. So for bigger accounts, that'll be good for both big accounts and small accounts. With bigger accounts, you'll have more simultaneous trades that you can be in, and with smaller accounts, you'll have more choice. So that works both ways. There was something else I wanted to say about that. But, yeah, anyways, that's the way I see it. All right. I want to thank everybody here for hanging out with me, checking out PatternCast. If you would like to try it out, you can go to traderofutures.com. It is at a ridiculously low subscription price, which we've already raised, by the way. We started out at $99 a month. Now it's up to $125 a month. We are introducing brokers, to carry it as a service, and I expect that when they do, that we may raise the price again, only because of the demand aspect. If you get into it now, you can lock in the price. We have 6 months of being out there with it. I've given you we've been doing it for much longer than 6 months. I introduced it to my Discord group back in early of last year. But we started the service for sure. Actual start date was October 4th. And it's been going fantastic. We've only had 1 week since then, October 4th, where it's been a losing week, and it was a very small losing week. And then since then, it's just been fantastic. I expect, and that's going through both relatively high volatility and low volatility times. So we've had a very wide variety of market types, and so it's shown its muster. Using your 30-minute chart rule, do you get filled trades at the specified entry price? Sometimes better, sometimes worse. I just think that 30 minutes seems to be a good time frame for me. That's what I use. It's not like a universal rule that I tell everybody and say you must do this. This is how we figure it out. No. Everyone develops their own thing. I had similar rules when I was doing pairs trading and looking at my indicator. I'd want at least after the signal, at least 2 bars of the indicator in, before I would commit to it. So this is that type of rule where I've just said, look, I want at least some surety. So even if I miss a few ticks, I'm willing to take that. Even if it goes above and then goes below, I'm willing to take that as well. It all averages out in the long run, in my view. All right. I want to thank everybody for showing up. Please go down and hit the like button. Hit that thumbs up button and share this video out with your friends. That is so important to us. By sharing it out there, it gets into the hands of other people. We get more people in here. We're able to expand the service. We're able to do a lot of things once we've expanded the service. I know that we're now that we've changed the name to PatternCast and branded it there. Actually, that's a name that has been with us for many years. It's just now that it's starting to come to light. We're going to be doing a press release with that, and of course that will then create more demand. Once the demand starts going up, so will the price. So if you want to get in now is the time. It's a fantastic tool. We stand by it 100%. The support on this is unequal. Everything that we do is completely transparent and open. You see all the trades that we do. I will publicize them every day. Support is immediate, live. In my view, it's a unique service, and it is by far, I think, the best service out there. And we're very proud to be with it and offering it to you. And I thank you very much for showing up. And now it is time to say goodbye. So thank you very much, and we'll see you tomorrow. Take care.